What is going on, guys? Good evening. It's your favorite mortgage lender, Abdel Kwame. Got mortgages. I hope everybody had a blessed holiday weekend. We are going to dive right into it. Got quite a little bit to talk about. Not much data last week, but we did still see a lot of different kind of market turbulence. We're going to take a look at that in detail, like we normally do. Kind of find out exactly what is happening, what's causing a little bit of this turbulence to start, right? So we're going to start from the top. What happened with mixed home sales, right? A little bit of mixed signals from both existing home sales and then new home sales. We'll dive into that. We'll kind of see some of the updates on new contracts and stuff. Take it from there. So existing home sales did drop a little bit to a 7 month low, down half percent month over month, 2% year over year. 414,000 is a median home price, which is actually up 2.7% and up almost 2% year over year. We still have a shortage of pretty tightness of home, right? 4.4 month supply, 29 days on the market from 36. So again, kind of showing the market really ramping up. 34% first time home buyers, 18% sold above list, right? Even though there was that drop again of 0.5% in March, still about 4 million units, which is considerable, right? Again, weakest level since April 2009. We are still seeing a super strong March contract signing, up 6.1% month over month. Remember, we did see a high level of cancellation, about 7% in April, mainly due to some of the turbulence that happened with the stock market and some of the volatility from there. Inventory did grow to 1.45 million, up 9% and 20% year over year. New home sales did actually jump up 743,000 new contracts, up 10% month over month, 3% year over year. Seeing a little bit of an uptick when it comes to the construction, still a decline of 8.1% on new home sales supply as well. Like we said, new contracts jumped up 10.9% in April, second consecutive increase month over month. And then if we see continuing jobless claims, really still showing, right, 1.9 million people still collecting unemployment, marking the second highest level since November of 2021, with continuing jobless claims again continuing to also jump up simultaneously at the same spectrum. Now, this week, we do have quite a lot to go over, right? We did get updates on home price appreciation, which I'll be able to go over with us exactly how that came in. I think we saw an uptick of about 3.4% year over year, still showing home values obviously appreciating. We will get some releases on the prior Fed meeting and some of the minutes of what they had discussed, which would be great for us to also see as well. We also have the PCE report is going to be the big one. That usually comes out on Friday. Personal consumption expenditure report. That's really going to give us an idea of how the gross domestic product overall is doing and truly kind of show us is inflation, which is the Fed's preferred measure of inflation, but is inflation still continuously going up or what is it actually happening, right? We'll get some revised Q1 GDP numbers as well simultaneously, which will kind of show a little bit of insight on that. Now, again, talking about home prices, we'll see that really quickly. Case Shiller, again, being the gold standard of appreciation, kind of showed year over year home prices rose 3.4%. Again, in moderation, 4% in the previous report. Obviously, it's hyper local, right? Some areas we're in the local market of New Jersey, still kind of showing some hyper markets outperforming, right? A lot of the different areas. The FHFA also showed their side of it. Home prices up 3.7%, a little higher than Case Shiller, deceleration from 3.9%. Again, the view is going to be on the PCE report, right? We expect, again, just like CPI, it's not going to necessarily yet impact some of the pricing on tariffs. So we're expecting 0.9%, replacing 0.2%, which is good, which should show obviously a little bit of a decline from the PCE standpoint, right? Now let's take a look at interest rates. So where have we been since the start of the year? You'll notice a little bit of a heart rate monitor, like I usually call it. Interest rates kind of ticking up, interest rates kind of ticking down. Important for us to kind of see we are a little bit on that downward trend, which is great. Kind of some of the data. PCE should hopefully bring us to the finish line and continue for us to kind of see. But you'll basically see here for just about, I would say, since February, kind of ticking in a little bit to where we've been at, if not even before that, kind of showing a little bit of how the market has just trying to been figured out what is happening with the market. There's still several opportunities for clients from a refinance standpoint. Many of them are usually just obviously holding up to the right time or necessarily may be doing a cash out refi. We're doing quite a few of those. replacing some higher credit card debt and replacing it with a lower total overall blended interest rate. So make sure if you're a client out there and you're someone who is struggling with some credit card debt or just getting killed on paying minimum payments on those cards, you connect. Be more than happy to kind of put a full financial picture together for you and take it from there. Appreciate you guys jumping on. Hopefully, we'll have a little bit some additional information in regards to the market and really what is going to be our expectation heading into the end of the month and take it from there. Appreciate you guys jumping on and have a blessed day.